Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week. This is the 329th session, and this has been going on for a long time. This event is being recorded. You will have the recording available on our blog as well as on our YouTube channel. If you are live tweeting the show today, please use hashtag 1M1M. And you can follow us on Twitter at 1M by 1M and at Sramana. We publish a lot of interesting content, quite rich educational content through these channels. The YouTube channel is 1M1M Roundtable, so you will find a lot of material, learning material there as well. These are the call-in numbers for this call, but we're not ready for call-in yet. We have first half an hour with Janet Kosloff, and then we're going to have 4 presenters, so we won't be turning on the call-in portion until much later in the program. But we do want you to eventually call in or participate in public chat. We're going to start today's session with a conversation with Janet Kosloff, co-founder and CEO of InCrowd. Janet, welcome. It's great to have you here.
Thank you so much. Thanks for inviting me. I'm excited to be here.
Great. So, Janet, let's, by way of introduction, tell us about your business. What does InCrowd do?
Sure. So we are broadly defined in the market research space, but we identified sort of the fact 6 years ago when we started the business that there was a lot of white space around being able to deliver information much more quickly by applying technology to the problem. So we developed a software application that's connected to an expert panel that we provide to our clients, which are primarily life science companies, so that they can ask their target market specific questions. They're usually commercially related, and be able to get data back in real time so they can make faster and better business decisions.
And you have bootstrapped this company to validation. Tell us, how did you do it?
Yeah, so, I started this company not as, like a 22-year-old right out of college. So I had, I had a whole host of experience and also had, some time to save up a bit of a nest egg. And I knew that, I always wanted to find the right idea to start a business. So in the back of my mind, I always knew that I needed to kind of have some capital so I could get the company going. Mm-hmm. And so I self-funded the business, but I also found a co-founder, which was a very critical piece of my success, I think, not only from a bootstrap and founding perspective, but having a partner in crime to really start a business with and go through the inevitable ups and downs and roller coasters of getting a business started. But Diane and I essentially wrote checks out of our own funds. We opened a bank account, and,
How did you find Diana? How did you meet Diana?
Yeah, Diane Hayes, she and I, we actually have a very long history. We knew each other through mutual friends, essentially for 25 years. But we did work together at a market research firm. I spent about 11 years at that firm, and she spent 5 years there. So for 5 years, we worked hand in hand, and I focused on, the external piece of the business, really sales and marketing related things, and she focused on really the internal piece of the business, operations and research. So I knew I knew her, I knew how she worked, and I knew that she would be a great complement to my skills.
Mm-hmm. And what wisdom do you have to offer to our audience about outsourced MVP development? I know it's something that you have done successfully. It's something that many entrepreneurs try to do, especially those who do not come from the technical background. What are some of the secrets of your success?
Yeah, it's a great question, because not having a technical background but wanting to be in a company where technology is really at the hub of what one does is definitely a challenge. So, we found software engineers that worked on a contract basis but were from a very small firm that we had worked with in the past, and were able to sort of parrot back our vision for what we wanted to build before one line of code was written. So I think that was really the key for us, was to be able to articulate exactly what we needed the technology to do, and we were pretty clear on what we wanted it to do. They really understood what the business problem was that we were trying to solve, and and then helped us build what we needed to do. But I think another important key is to know that you're not going to build it right the first time, no matter who you hire. I would imagine even if you were technical in nature, the first iteration of a product usually is not where you end up, and our product has morphed pretty dramatically over time. So, I wouldn't get too hung up on it. I would say find someone that understands what you're trying to do and get going. And the sooner you have something for real customers to react to, the better off you are.
Well, one thing I heard you say just now, which I think is of consequence, is that you had some prior relationship with the software engineers that ended up working on your project, and there was trust. Trust
Yes.
is one of the huge, pieces of the puzzle. In finding a co-founder, trust is a huge thing. In finding partners, outsourcing partners, etc., trust is a huge thing. And wherever you can leverage past relationships that bring that trust with them, that is of immeasurable value.
Yes, I agree with you 100%. And the other piece that I think made that early relationship successful was that, they knew that we were spending our own money and that, every dollar counted. So they were willing to take some equity in exchange for probably a market rate for what it would cost to build that. And I think because they had skin in the game, it made the relationship even deeper and, I think to your point, even more trustful.
Well, and also I think that kind of equity relationship doesn't happen that easily unless you have a prior relationship. People don't take equity, especially development teams, do not take equity in random startups either.
Yes, that's true.
So switching gears a little bit, you are based in Boston and you raised angel financing from an angel group in Boston. Talk about that experience, and with what milestones did you go out to raise this first round of financing?
Well, I didn't try to start raising money until we had, some proof of concept, even though it was pretty small in terms of, having, something built that was real and some clients that were on board, or at least, very seriously contemplating. The process of raising the angel money was very difficult. It took a long time. I think I had an advantage because my background being sales and marketing, the process is very much a sales and marketing driven process. You have to find champions. You have to be relentless in your pursuit and your follow-up. You have to present things in a way that's going to, get people to buy your story and to ultimately invest. But in Boston, there are a lot of angels. Many of them are organized into multiple different groupings of angels. And I even, I pitched outside of Boston. I pitched in Connecticut. I pitched in New York City, sort of went all over the neighborhood. But what I found was, and I actually think it's changed somewhat in the last 6 years in this area, that it really was herding cats. So you could go to an angel group and get a lot of very positive reinforcement and, a lot of interest, but you still needed to get one of those angels to really stick out their neck and step up and say, okay, I'm going to now lead this charge. That's right. And, the funds, at least around here, the angel funds won't do that as a fund, or at least they didn't at the time. So they're really just organizing bodies. They're not, they're not collecting the money and investing it as a group for the most part. Right. So even if you get a champion and they start the due diligence, you still have to get individual checks from each person that's interested in investing, and because of that, it becomes a very labor-intensive process. Chasing people down even after they've made commitments. So it was hard. What milestones you went into this round with? Regardless, it was very difficult, but you did have customers. You had paying customers, yes? Yes, we did. We had a couple of paying customers, and that absolutely was critical, I think, to our success because, my credibility as a founder was really based on the fact that I could bring this to market because that was really my expertise versus some, very unique IP. We didn't have that. I mean, we had some IP around how we put things together, but there wasn't anything particularly novel from a technology perspective. So yes, having clients on board was absolutely essential. And in the due diligence, the potential investors wanted to talk to clients that were actually using the product. Absolutely. That is something that is a given. So, those in the audience, if you're thinking about raising seed financing, please understand that you kind of need to bring customers to the table so that investors can talk to those customers and understand their point of view as part of the due diligence and validation process. Now, Janet, you also raised a small venture round. Talk about that experience and with what milestones did you go to raise this round then? Yes, strangely enough, how we raised the venture money was much easier than raising the first angel fund, and partially it was because there was a couple of VCs in the market that had sort of found us, that were sort of in the market of doing follow-on rounds from some of these angel groups, very tied into those groups. And so they found you through the angel groups? That's how they identified us, and the investor who ultimately, the venture capitalist who eventually did invest in us, came to me. But we developed a relationship over a period of time. It wasn't a slam dunk. He thought what we were doing was really interesting and along the lines of the kinds of investments that they like to make, and we probably spent 6 months, just getting to know each other, going back and forth, him learning about our business, and then it ultimately culminated in an investment. And the angels at that point, it was only 9 months after we had raised the angel money, they actually weren't thrilled with our bringing in more capital at that moment, but it felt like to us that the capital was available, the terms were good, and it really would propel us to the next stage. And I think in retrospect, that was true. Okay. So you are forecasting $10 million plus in 2016 revenue with just around, about 2.5, 2.8 million in total financing? Yep, is that right? Accurate?
Yeah?
Yes.
So what is your business model, and what are some of your scaling secrets? You've done it in a very capital efficient way, which we admire tremendously. So talk to us about your business model and how have you scaled that business?
Sure. I'm not sure there are any real secrets, but the business model is subscription-based. So, and that was actually an important factor in our success in this business. If anyone out there has any experience with purchasing market research, it tends to be purchased on a project basis, more like consulting. You have some very specific needs for market research. You hire a firm to do it. They execute the research, and then you're done. And then, you know, the firm has to then try to get more business from that customer or other customers. But we flipped that on its head a little bit and developed a subscription-based business. The main reason why we came up with this business model was because from the client's perspective, when they needed to have information in real time, they really didn't have the luxury of going through the procurement process. And in life sciences, especially big pharma, it could take 2 months to get approval for a project and get a purchase order. So, so if our clients were, you know, buying a subscription where they had access to these experts prepaid, essentially, then they could tap into it at any time. So we came up with the business model from the perspective of the client need, but it turned out to be sort of one of the best aspects of our business model because our clients pay us up front. And that's part of the reason why we've been able to be so capital efficient. Because when a client buys a subscription, let's just say it's a $100,000 subscription for market research services, they're not paying us on a, you know, sort of a SaaS basis where they're paying a monthly rate. They're paying it all up front, and then they're using it over time. So that gives us very nice cash flow, and it gives us the ability to, you know, self-fund our business a little bit and have our clients essentially help us fund our business. So just getting back to the business model, they buy a subscription. In that subscription, they'll buy a certain number of credits for answers. So if you buy, you know, 100 credits, each credit is worth 1 answer from an expert. And so our clients buy the number of credits that they think they'll need over a 12-month period. They bank those credits, and then they use them as they're needed. They're kind of like, yeah, it's sort of like phone minutes, right? So you buy them, and then you use them as you need them, and then they roll over if, you know, if you resubscribe. So that's the business model. On the scaling front, you know, our growth model is really very basic. It's land and expand. So when we enter a new client, you know, oftentimes a client, because we're doing something in a bit of a different way than they're used to, they'll be a little bit nervous about putting a lot of money into a subscription of something that they're not really sure if they'll use it, if it'll be effective. So they tend to purchase, you know, a relatively small subscription, and that's kind of the land piece. And then it's our job to make that client a power user. So it's our job to get them to understand all the different ways they could use the technology, comfort with the technology, and move as much of their market research onto our platform as is possible, and then try to find out who their peers are, who are other potential users in their organization, and try to expand within those organizations. And that's been a key to our success. We have a couple of clients this year that will be million-dollar clients, and in those client organizations, we are involved with many brands, which is sort of how drug companies organize themselves, and many users within those brands, as well as different functional areas. So we're successful in scaling where we're able to get our tentacles into all of the people within an organization that have, the need for market intelligence. It's really blocking and tackling, and that's sort of why I said I'm not sure there's any real secret to it, because it's
there is a secret in the thing that in all the things that you said on this point. We've done more than 750 entrepreneur journeys, case studies, and one thing that you said, which is a bit of a secret, and it does, recur in people who have been able to do capital efficient, revenue building, significant revenue building in a rather capital efficient way, the way you have done it. The whole point of getting paid in advance for, even if it's subscription revenue that is actually, getting utilized, the subscription is getting utilized over, month over month over a period of time, but if you can manage to get paid in advance, that tremendously eases the cash flow pressure. And I've seen this particular strategy come up over and over again, where the entrepreneur has succeeded in doing a remarkably capital efficient business building. So I think what you're describing in your cash flow management strategy, that is definitely one of the ways that, something that is a good takeaway for our audience, is in that it's something that if you don't always have the opportunity to do this. Not all businesses lend themselves to this kind of payment structures, but if you can come up with a business idea that has this type of payment structure, that tremendously helps in cash flow.
Yes, I would absolutely agree with that. And I think in our case, what made it really nice was that, we weren't even, we probably should have been smarter and been thinking proactively like that, but we sort of fell into it based on the, sort of the practical need of the client. So if you could come up with a business where the client says, yeah, it makes total sense for me to purchase it up front because of how the thing operates, then that's, that's all the better.
Yeah. So last question for this segment, Janet. What is your experience as a woman entrepreneur in technology?
Yeah, that's a really interesting question. I have one that I could probably talk about for a really long time. I would say that in all of business, I think, and in technology in particular, tends to be much more male-dominated. I think that investors like to see pattern recognition when you fall outside of the patterns that folks expect to see. I think it can make the journey harder. I'm here in Boston. There are 22-year-olds out of MIT are, trying to start companies or are a dime a dozen, lots of them. I don't look like those people. I think, that's something that, can, pose challenges. But I honestly do believe that when push comes to shove, it's about the idea. It's about your ability to sell that idea. It's about, the actual progress that you've made. So while I do think there are absolute challenges that are real, I think they are also very surmountable, and I think hard work, good ideas, and results win, because I do think ultimately it's a meritocracy, but sometimes, to get there can be more challenging for people that don't fit, that pattern recognition.
Have you ever had any challenge selling to customers because of your gender?
No, I've never experienced that at all. You know, one of the things that I can say about selling to customers when you're the founder of a startup is people love to hear your story. People want to sort of live vicariously through you sometimes and get really excited about being part of that journey. And that definitely helped me in selling early on, being very real about what you're trying to do and about your challenges and about what you're trying to accomplish and how they could help you get there. That's been very useful and helpful for me. But, you know, in my world, I would say there are probably as many women selling into drug companies as there are men. So I've never felt like my gender's been a challenge in selling.
And that kind of is the real secret of selling to investors, is first selling to customers. If you can convincingly sell to customers and bring those results to investors, I actually don't think investors care about your age, your gender, your ethnicity, nothing. All they care about is, do you have a viable business, and are you, you know, showing that you have a viable business that is, you know, reasonable, basically, and that they can hang their hat upon.
Yes.
So I think the point that you made about patterns vis-a-vis age, yes, there is to some extent that pattern of a certain age group being more present in the startup ecosystem, especially these days. But again, I think the real issue is, do you have customers? Have you validated your business? And if yes, then you are going to be worth consideration from the investors, and if not, you will not be.
Yep.
Okay, so that's very interesting and inspiring and completely, you know, completely consistent with the way we like to build businesses, Janet. So the story you told us just now is the kind of capital efficient entrepreneurship stories that we like our audience to travel in the footsteps of. Maureen, could you freeze the video as we go into the next step of our next phase of the presentation today? We do have several entrepreneurs who are going to be presenting, and Janet and I are going to be working with you in a moment. Before we go into that, I have a message for those of you in the audience who are from Oracle. The Oracle 1 Million by 1 Million Challenge is going on right now, and the application deadline was yesterday. So we have received all your applications, and the judging process is going on right now. Next week, you will have the results, and I'm very glad to see that many of you who have, you know, submitted applications are here today, you know, getting a feel for the program and, you know, kind of immersing yourselves in this workflow that we are going to be using going forward as you come into the program. Those of you who are going to be winning scholarships from Oracle to be in this challenge. So we very much look forward to having you in the program, and very soon you will have the results. So good luck to all of you. I'll take questions later on in the program about that as well if you have any questions. So folks, those of you who are going to be presenting today, please know that this is a working session. We have no other agenda but to work with you, listen to your businesses and strategies, and give you some feedback based on our experience. There is absolutely nothing else going on. So we are on your side. You need to know that we are on your side. You should feel safe to discuss whatever you want to discuss, and we'll just work on your business for a, you know, small segment today. And then if you decide to join the program, we will work on it much more closely and much more extensively. Now, it is quite possible that you might disagree today with our feedback. Don't feel bad about it. This is your venture. You collect feedback and you see what makes sense to you, and you decide to go in whichever direction you want to go. But it is your business. It's okay for you to disagree with our feedback. One thing we will say is that not all businesses can raise money, not all businesses should raise money, and raising money does not guarantee success. So please do not be single-minded and obsessed with raising money, because there are criteria in raising money, and not all businesses fulfill those criteria. And if you're not pitching, please participate by asking questions in the public chat. Make sure you set your chat to send to all participants. Do not send me private messages. I will not be looking at private messages right now. You guys some of you are sending me private messages and lengthy private messages. I just can't look at it right now if you send me private messages or dialogue with you. I will pick up questions from the public chat, so make sure you set your chat to all participants, send to all participants, and type in your questions there, and we will answer those questions in a little bit. So let's get to work. Our first presenter is Andy Williams. Andy from Nairobi, Kenya, is going to be presenting Nobeah. Andy, please unmute your line and tell us what you're working on.
Hi there, can you hear me now?
Yes, we can hear you fine.
Perfect. First of all, thank you, Sramana, for conducting this wonderful platform. So we're developing.
You're very welcome.
Thank you. We're developing a fundraising and investment platform that combines projects into value chains so that one project provides customers and sales to another. We call it the social impact marketplace. The social impact marketplace also aims to enable investors to continue to use the exact same due diligence, impact assessment, project monitoring, and other processes they use now, while providing workflow automation to accelerate it. As an example, we've outlined a proposed pilot in South Sudan where NGOs are trying to create jobs by running tailor training programs. But unfortunately, there is no clothing industry to hire the people they train. Sorry, slide 3, please. Virtually all clothing is imported, and though cotton is a significant crop, virtually all of it is exported. The value chain is broken. But with the uniforms needed for school children each year in South Sudan, there is the potential to create as many as 10 to 12,000 tailoring jobs if all the uniforms weren't imported. To fix this, the marketplace will define a series of projects. The first project will distribute school uniforms, and to guarantee sales, the project might offer stores that sell school uniforms a 50% discount for the first year in return for signing up to buy those school uniforms for the next 5 years. We'll then define a project on the marketplace to train tailors, a project to manufacture the uniforms and hire the tailors, a project to weave the cloth from local cotton, and a project to source the cotton from local growers for the same 5-year period. Each of these projects will be profitable, and given that this value chain approach will provide a predictable amount of sales, and because each business knows its costs, the marketplace will be able to project a return on investment for each project that will enable investors to bid to fund the project, and that will enable implementers to bid to deliver the projects. As an example, the project to manufacture the school uniforms might require $100,000 to start. I, as an investor, might bid to invest that $100,000 for 25% equity. You might bid to invest that same $100,000 for 20% equity. Therefore, the marketplace would rank you higher as an investor. On the implementation side, I might have a clothes-making business that I want to expand. So I might bid to manufacture the school uniforms for $90,000. You might be a hungry startup looking to get into the clothing manufacturing business, and you might bid to manufacture the school uniforms for $70,000. If the marketplace confirms you have the capacity to deliver, it might rank you higher. So the marketplace will bring together the most highly qualified entrepreneurs and the most highly qualified investors in a value chain that will help them all succeed. Typically on their own, the failure rate of startups is about 90% because of the difficulty of finding customers, developing sales, and deciding on a product or service, or even the features of the product or service. On top of that, they face the continual difficulty of finding funding, all the while burning through their startup funding. Or if they're bootstrapping, working through all this while having no funding at all. This marketplace aims to use this value chain approach to flip that 90% rate of failure to target a 90% rate of success instead. And rather than the donor in this example giving the skills training NGO $100,000 in hopes they might create 100 jobs by training 100 tailors, this marketplace will enable the donor to enter into a social impact bond with each of the 5 projects in the value chain to give them $20,000 each after they've created 100 jobs, thereby multiplying the impact of the donor's funding by 5 times to create 500 jobs instead. Because the marketplace could also potentially increase the probability of project success from, in some cases, 10% to near 100%, the impact of the donor's funds is multiplied by a further 10 times in this case, resulting in a large total increase in impact. So entrepreneurs will be able to enter their business ideas or existing businesses into the marketplace, and algorithms in the marketplace will search through all the existing or proposed businesses to find value chains that might help them succeed, and therefore that might help them get funding. The marketplace won't own any portion of the actual businesses, but will charge a small percentage of funds raised as a fee to bring them together, and will charge additional fees for optional services like due diligence and monitoring and evaluation. Next slide to slide 4, please. We're seeking $200,000 US in exchange for a 20% equity stake, or an equivalent amount in debt financing or donor funding. By incentivizing donor and investment funding for projects, as well as providing services to attract entrepreneurs looking for funding, the marketplace will target revenues of $100,000 US in the first 12 months, $1 million US within 24 months, and $10 million US within 36 months. Next slide, please, to slide 5. This marketplace will incentivize investments in projects through cooperative synergies, that is, cooperation between all the participants in the marketplace. These synergies include enabling social impact bonds to contribute to return on investment. With these synergies, the marketplace will target a baseline return of 25 to 100% for investors in initial projects, even before those projects themselves appreciate in value. Slide 6, next slide, please. The marketplace will also incentivize donors to contribute to social impact bonds that stimulate this investment in projects. These donor incentives will be the cooperative synergies just mentioned that magnify the social impact of donated funds significantly. The marketplace will help ensure businesses are in profitable value chains so that the social impact achieved by the products or services deployed in any of those businesses is sustainably self-funding. Because this impact is sustainably self-funding, the marketplace is unique in allowing that impact to be potentially deployed at any scale required to serve any population. Slide 7, next slide, please. This marketplace approach is
rolling out slide numbers. I have no idea what they are because you're now part of a much larger slide deck. So your slide 7 and slide 6 mean nothing to me. So I can't really figure out which slide you want. So unless you call out the names of the slides, I can't help you.
That's okay. We'll just ignore the slides for now because we'll just ignore them.
Okay.
So this marketplace approach is compelling for startups looking to get into a market related to their prospective new product or service because the marketplace will allow them to gain much needed income and customers. It's compelling as well for businesses looking to expand. But most importantly, because we've defined algorithms to create synergies that lower the cost and increase the probability of any project, where such synergies might be difficult otherwise, the social impact marketplace is what we call a change engine, capable of supporting any social impact achievable through any product or service that a business can offer, including big problems like not only massive job creation, but also significantly alleviating lack of access to education, healthcare, and other social issues. A prototype of the social impact marketplace will be completed within the next week or two. And so finally, I end with...
Andy, I think we've got what you're doing. Let's start giving you some feedback in the interest of time.
Sure.
My first feedback to you is that if you're trying to do some sort of an impact investment marketplace, then you should focus on, people who are willing to invest in that mode, right now you're saying you want angel investors, venture capitalists, blah, blah, blah. These people are not necessarily impact investors. Venture capitalists want to make money. Angel investors, by and large, want to make money. And there are some very specific ways in which they make money with some very specific requirements and very specific assumptions. So given what you are describing here, they would have no interest in participating in your marketplace. And part of the issue with marketplace businesses is that you need both sides to work. You need credible entrepreneurs who are going to execute in this model, and you need willing investors who are willing to invest. And if you cannot get both of those on a platform, your marketplace is not going to work. And in terms of precedence in the world of entrepreneurship, investment marketplaces have not worked. There is one that is AngelList that kind of works a little bit, but a large number, I would say, like everywhere else, 99% of the businesses that go out to seek financing on the AngelList marketplace actually do not get funded because they don't qualify for funding. There's a small percentage of businesses that do get funded. So AngelList is one that has managed to make it work, but it works in a very classical, venture fundable business model. So they're not looking for impact investment or anything like that. What has worked on the impact investment world is models like Kiva, where people want to do social good projects. And Kiva, you should look into Kiva, you should look into AngelList and study what works. But if you try to club all of this stuff together in one place, one, it will not work, two, you will get no traction, and three, you will definitely not raise any funding for that. So you're going to need to isolate something that is important to you and something that has a chance of working. For example, if you do something like Kiva that is specifically for the kind of projects that you are talking about, that may work. And that may fall more in that crowdfunding kind of model. Crowdfunding, Kickstarter works, for instance. So if you map the Kickstarter model onto your type of assumption, that may work. But right now, you have too much of a hodgepodge. There are too many disparate models that you're trying to fit in here, and I don't think this is going to work.
Okay, well, thank you very much for that feedback. I wanted to ask you, or get one point of clarification. And that is when you say that you should I should either focus on impact investors or investors who want to make money, is that under the assumption that the returns possible on this platform are not on the level that angel investors and other investors would be interested in?
Yes, that's right. There is impact investors often are willing to accept much lower returns. It's not like you'll get them for no return. You will get them for lower expectations when it comes to returns, whereas traditional angel investors and venture capitalists look for much higher levels of returns, and they would not be interested in these kinds of projects. Your other option is doing it more in the...
I wanted to correct that misperception. The idea is that these cooperative synergies are meant to make higher returns on investments than market-leading returns on investments, not lower returns on investments.
Yeah, but that's so that's you can say that, but it's not going to work that way. The kind of businesses you're projecting here will not give you that level of return. They're just not structurally capable of giving the level of returns at the speed at which the VCs want returns. It just doesn't fit the model. You can say that, but okay. It's not going to pass due diligence.
And just to clarify, those specific types of businesses in that example, businesses that typically don't have the hockey stick growth that angels and others are interested in. That's just one particular example. The concept of forming a value chain in which businesses can support each other and help each other succeed can apply to any type of business, whether it be a software business or a technology business, etc.
Please understand the hockey stick model of growth applies to very few businesses. Less than 1% of businesses fit that model. And in Africa in particular, you'll find very few businesses because it's a much, much more nascent ecosystem. You'll find remarkably few businesses, definitely not enough to do a marketplace. So, you know, if you find 10 businesses that will fit the venture capital model, that would be, you know, an achievement. So you can't build a marketplace with 10 businesses. Okay, so that's my feedback, but there are ways to make this work. So please think about it. Janet, what are your thoughts? Somebody's echoing. Okay, go ahead, Janet.
I think I would say, you know, from a, you know, if I'm putting on my angel investor hat, in terms of this presentation and what you've said was, you know, I would say there's a part of me that, you know, finds it compelling from a, you know, being a change engine and from a social good perspective. But I think from a business perspective, it was very, very hard for me to understand as an investor, you know, how all the moving parts work and how, you know, money gets made. And, you know, there was a lot in there. You know, there were a lot of interconnections, and then there were things around, you know, improving life and, you know, all kinds of other things. And it felt like the message got very muddled because of there was so much content. And I think if there's a way for you to explain it in a much more linear fashion and you know, describe it more in, you know, in business terms and ROI, I think that would really be helpful for.
So Andy, the feedback you're getting from Janet is that your presentation also needs a lot of work. You need to learn how to present a business case, and that's missing from your presentation as well.
Yeah.
Great, thank you.
You're welcome. Manisha Kad from Pune, India. Please unmute your line. Thank you, Andy, for your presentation. Manisha, you're up next.
Good morning, Sramana.
Good morning. Go ahead.
Good morning, everybody present in the roundtable. This is Manisha Kad from Pune, India. Thank you for giving the opportunity to present myself at roundtable. So let me start with the presentation. So brief agenda is, I want to explain my business plan, then present business strategy. And I have already started with my business, so I'm facing some problems regarding marketing. So I want to present those issues, and I'm seeking guidance for my next roadmap. Next slide, please. Okay, so brief introduction about myself is I'm Bachelor of Engineering in Electronics and Telecommunication, and I have completed my PGDM in EDP, Entrepreneurship, and I'm business owner at Saadh Embedded System Solutions. Saadh is a small firm providing business and technology solutions in embedded system domain. I have 15 years of experience in industry, and I have worked with versatile technology and domains such as process control, industry, automation, PLC, HMI, life safety, etc. Actually, I have also experience with running Saadh for 1.5 years, and as an owner, I have done all the startup activities alone with the help of team of some freshers, and because of low margin, I could not continue that business more than 1.5 years. So I had taken break and completed my management course in EDP, and now I want to start that venture again. Next slide, please. Okay, so my vision statement is make people's life better through technology, and customer satisfaction is our main goal, and it is achieved through innovation, technology expertise, commitment, good quality, and speedy processes. Next slide, please. Okay, so My business model is I want to start my initial revenue through providing business as well as technology services. Technology services will contain embedded system product services such as software firmware development, product development, testing, or training. So this is similar to providing IT services. And so technology focus shall be process control, sensor technology, industry automation, renewable energy sources. This is my comfort zone because I have worked on this technology during my industrial experience. And my future technologies are robotics and AI technology. Next slide, please. Okay, so actually, I want to use my experience in industry to help middle-scale companies to grow their business through social media research for their existing products, or identify customer needs, or analysis or strategy for product development. So this will actually contain analysis of their existing processes of management or the problems they are facing during development, and definitely I'm able to give some solution for them to grow their business. Next slide, please. Okay, so first focus for Saadh is to focus on B2B model clients, and then once the revenue will be generated, Saadh will develop their own products with, that will provide solution to clients and will make revenue. Next slide, please. Okay, so why us? Because we have versatile experience in industry, we have continuous learning ability, we are in touch with latest technology, so we are better to understand clients' business requirements. We can plan the strategies and solutions for the completion of assignments, and we are better for executing projects because of experience. Next slide, please. Okay, so I have, before selecting technology, I have done some market analysis with the firms. They are providing market research reports. So these are the results. So I'll talk about embedded systems. So revenue generation for embedded system is $852 billion, and CAGR is 10%. This market is continuously growing. The same thing is about building automation and industrial automation, robotics, process control, and environmental control. So from my study, it is seen that every market has substantial growth. So I have selected this type of technology. Next slide, please.
Can you stay on the slide for a moment? I'm going to ask you a question. What is your personal core competency? You have rattled out so many different areas in which you want to work. You want to work in embedded systems across various segments, then you want to work on sensors, building automation, social media marketing. This is like motherhood and apple pie. This is not how businesses are built. So, you know, one thing you're going to need to focus on is what is your personal unfair advantage? What is it that you're really good at, you have a really deep understanding of, and where you can actually defend these claims you're making? All these different areas you do not have any ability to defend your claim that you're the best. But is there one area where you have real differentiated, defensible, unfair advantage? What is that area?
Okay, so I'm good at embedded systems, but if you see all
embedded
technology,
systems for what? Embedded systems for automotive applications, embedded systems for robotics applications. What embedded systems?
Okay, so actually sensor technology is the area where the embedded systems are really used. So
okay, so then your entire business plan needs to be built around doing embedded systems applications, developing embedded system applications for sensor technology, and nothing else. You should be thinking about absolutely nothing else. You have a lot of stuff on these slides, and none of them should be on those slides. The only thing you should single-mindedly focus on is embedded systems for sensor technologies, and then build the entire business plan around that positioning.
Okay. Okay.
Okay. So I think the other feedback I have for you is that you really need to learn the methodology of how to build a business. This is a little bit too all over the place, and I can see why you're, having difficulty executing. So this is something that you can learn through 1 million by 1 million very efficiently. If you spend, 1 month or 2 months really deeply studying methodology, you will be in a much, much better place in terms of how to navigate your way through. We have a complete curriculum to teach you all that. So I would strongly recommend that you plug your methodology knowledge gaps here, because otherwise you're going to be wasting, a lot of years of your life just bumbling around basically and not succeeding in getting to a very precise business execution plan. Okay. Janet, your thoughts?
Thank you.
Yeah, please.
Hold on, Manisha. I want to hear what Janet has to say.
Okay. What jumps out to me here is that it feels more like a consulting firm where you're going to be building things for specific customers versus building one thing and then selling it to a lot of customers. And I'm not sure if that's right, but that's
perfectly fine. That services businesses are very, very, easy to bootstrap. Actually, you take projects from clients and develop them, and you get paid on milestones. Cash flow wise, those are perfectly fine, and I don't see a problem with that, Janet.
I agree that they're great businesses. I was just wondering from a funding perspective if
she doesn't need to raise funding. Not all businesses need to raise funding.
Okay.
In 1 million by 1 million, this is absolutely a cardinal rule, is that we're not hung up on financing. Entrepreneurship does not equal financing. Entrepreneurship equals customers, revenues, and profits.
Yes, then from that perspective, absolutely, there looks like, if you've got this expertise and there's, the need there, then, I don't see why this wouldn't work. I was just looking at it from a financing hat, but I hear you, and you're right. Not all businesses need to be financed, and lots of really great businesses never take a dime, and more power to you.
And the other thing that Manisha, hold on for a second, please. Just listen to the feedback for a moment before talking. The other thing that we completely buy into is services businesses, especially services businesses that focus on a specific domain with some real skill set in that domain, often end up being able to develop product using those customer relationships and the cash flow and so forth. And, we call it bootstrapping products using services. That is also an acceptable methodology, and it's a tried and true strategy for building successful businesses. So with businesses like what Manisha is presenting, that opportunity also remains open. Mm-hmm. Go ahead, Manisha, you wanted to add something.
Yeah, actually my problem is I don't have testimonials or a social profile. So how can I convince a client that I'm the good person for your solution?
Well, you must have a resume. You must have done stuff before. Do you have a resume?
Yeah.
So you're going to have to, first and foremost, in these kinds of situations, you're just going to have to sell your resume and your expertise.
Yeah, but
and develop testimonials as you go along.
Okay, so I have started blogging with the website, but I'm not able to spend any money for marketing. So I guess this is my problem.
This is the kind of business that doesn't develop with marketing. You're going to have to sell. You're going to have to be very precise in whom you're going to sell to. You're going to need to find who are the potential customers for your skill set, which is embedded systems engineering, in the sensors market, and you need to find who are the potential customers to whom you can sell your services and basically sell. You don't need to spend a dime on marketing. This is not a marketing-oriented business. It's a sales-oriented business. You're going to need to learn how to sell. Okay? All right, so you have a lot of methodology gaps to plug at this point, so I would suggest you get going on that path. All right, thank you, Manisha, for your presentation. We're going to Kevin Cherian from Bangalore, India. Kevin, go ahead.
Yeah, thank you, Sramana.
You're welcome. Go ahead, Kevin.
So thank you for providing this opportunity.
You're welcome.
So I'm here to discuss about my business idea, HashMe. HashMe is basically an artificial intelligence-based virtual mentor for startups. So this is our problem statement. As we look around, we see a whole lot of curious minds coming up with creative ideas. However, not all of them succeed. 90% of these startups ends in failure. Let's know why. So can you go to the next slide? Based on the analysis of 101 startup postmortem, we can see a lot of issues faced by the startups like no market needs, run out of cash, etc. are the main criteria where most of the startups fail. So the main area which is pointing is there is no proper sense of direction or guidance in one of the main issue of the failure. So, and this is where we are coming up with our solution, HashMe. Next slide, please. Through HashMe, we provide a virtual mentor for startups to overcome the challenges. It provides a proper direction, support, motivation, and advice, and will direct you to goal. Next slide. The product addresses of two types of customers, startups and investors. For startups, we provide market analysis, latest trends, competitors and their investors, latest products and features through big data analysis. Artificial intelligence will suggest the market strategy and technical solution that can be taken by the startup. We will also provide the cloud-based services that will increase the growth of the startup proportionally. And the main part of our idea is to connect the investor and the startup. Yes. And for the investors, can you go back to the previous slide? And for the investors, HashMe will provide information and statistics of booming startups so that the investors can decide in which startups to invest. We will also provide a amateur investment group concept such that a group of small persons can combine together to invest on a startup. Next slide, please. So the target customers are all the startups and the investors who are interested in starting or investing in startups. So we'll be filtering the startups based on the industry, age group, location, technology, and revenue. This will be the kind of dimension for the AI and for the big data analysis to work efficiently. Similarly, for investors, we have segmented the investors based on the location, value, and experience. Next slide, please. This is the core architecture of our product, HashMe. The center one is our product, HashMe, and we'll have the startup on the left top corner and investors on the left bottom corner. Let's explain in detail. Here, a startup company or a person can register in our application. They will provide the information related to their ideas like technology, industry, location, expected revenue, target customers. Then based on this information, our AI and big data analysis will provide a detailed report of the target market area, competitors in the similar group, their investments, revenue, etc. And we will also provide some suggestions about the functionality that can be incorporated into their ideas. Let me give an example of this. Suppose a startup comes up with a field of instant messaging. We provide them the details of the competitors like WhatsApp, current market, etc. And need of such products, etc. We also provide suggestions based on user reviews about existing. Can you go back to previously?
Kevin, we are running out of time, so I would like to give you some feedback before you go further.
Sure.
First and foremost, over 99% of the startups that seek financing are not fundable. So, as you heard me say this to Andy earlier, most startup marketplaces have failed, and they're going to continue to fail just because of that statistic, because over 99% of the companies who come onto such a platform looking for investment are not going to qualify for investment because they don't meet the criteria of investment. Not everything is fundable, and you're going to learn if you do win a scholarship through the, I know you're from Oracle, if you do win a scholarship from the Oracle program, you will learn exactly what the methodology of building startups is and how investors evaluate startups and what you need to qualify for funding, etc. So you can hold on to this idea. This is, by the way, this is not an idea that Oracle will be interested in funding at all. Oracle is only interested in funding ideas or interested in supporting ideas that fall in the enterprise/business software domain, B2B software domain. What you're proposing here is of no interest to Oracle at all. So that's one feedback you need to keep in mind. The second, so if you win the scholarship in the Oracle program, you're going to have to come up with a project, an idea that is of interest to Oracle, and that will have to be in the B2B domain, ideally in the cloud software arena. But I'm giving you some feedback on your idea anyway, because you have, come up with this idea. You need to understand what is the problem with this idea. Now, the other point is that let's say there is an entrepreneur and that has an idea that qualifies for investment. The likelihood of that idea having a lot of competitors is very low, because it's more the ideas that come up early on and our original ideas that don't have a lot of market data, etc. That are the ones that qualify, that investors tend to be more interested in. If the market is littered with competition and data, that is probably too late for investors to be investing in those. There may be one or two competitors, but there's not going to be a lot of data on which you can do any kind of artificial intelligence type of modeling to access that market. So these are the, just a couple of dynamics and realities of a startup marketplace and why they fail, especially if you try to do it on an automated basis, you're definitely going to fail. So this idea is not a strong idea, and more importantly, this idea is not going to be of interest to Oracle at all, because it doesn't fit Oracle's business. Oracle is in the business of B2B software, right? Software and cloud services. So if you want to win the 1M1M scholarship, and if you want to build a business within the 1M1M program, the 1M1M Oracle collaboration, you're going to need to come up with something that is of interest to Oracle. And this is true about all of you from Oracle who are in the room and who have applied for the scholarship. Please make note of the fact that your ideas cannot be B2C ideas, cannot be marketplace ideas. They have to be cloud software and cloud services ideas. Okay, B2B cloud services ideas.
Yeah,
go ahead, Kevin.
Can I tell one more thing? Yeah. So here we have one more settings actually. Can you go back to the picture? So here we will be providing the services of the cloud as well, cloud ERP services, database, etc. to the customers, so that they can develop their application based on that. So here we will be providing.
This is not how startups work. Have you ever been in a startup? Do you know anything about how startups work?
Yeah. So for the startups also, they need some information regarding like ERP, how to. They have some information.
When a startup is building a company, thinking about ERP is one of the most irrelevant things. They do QuickBooks. ERP, the equivalent of QuickBooks for a equivalent of ERP for a startup is QuickBooks, and that's a tried and true. And there are a few other pieces like that. These are, you know, basic accounting software. That's all startups need. They don't need more than that.
Yeah, that's what we'll be providing the smaller, reduced price rate of the ERP products in the cloud. Actually, that's what I.
Well, that's a different business. Yeah. Then you should be focusing on the ERP software segment, for which Oracle has just acquired NetSuite. So the likelihood of Oracle being, you know, particularly keen on developing another ERP suite is very low right now.
Yeah. Okay. Yeah. Thank you. Thank you for the information. So
you're welcome. So, you know, the thing that I like about, and then I'll share with you what I've already looked at your application and I've given this feedback to the judging team, is that I like the fact that you have gone ahead and developed an idea to a certain extent. And that gives me evidence that you're capable of developing an idea. So now, if we teach you the methodology of how to develop an idea, and if you focus your entrepreneurial energy on a B2B cloud services kind of opportunity, you use the methodology and you focus your energy on trying to come up with an interesting, viable B2B cloud services idea, I think you and your team can be successful. So let's see what the other judges think, but I actually have supported your application for the scholarship.
Yeah, thank you. Yeah.
You're welcome. Yeah. Okay, Navajit Basu from Kolkata, India. Navajit? Go ahead. What's happening? Where is Navajit? Not on the call? Okay, folks, I'm going to move on. If you're not on the call, you're going to miss your slots. So what we're going to do is spend a little bit of time going over the resources that you can use to plug your methodology gaps, knowledge gaps in how to put one foot before the other in developing your businesses. The first free resource that I would point you to is go to lynda.com and look at my bootstrapping course. You know, even if you decide to raise money, or if you think you want to raise money later, you're going to have to bootstrap first, raise money later. That is a requirement for the industry today. You heard Janet describe her experience of bootstrapping to paid customers, and that is that's a given. That's kind of how the business operates these days. So you're going to need to learn bootstrapping. Also, you can go to the 1M1M site, 1mby1m.com, and you'll find tons of resources. You'll have the blog, which is free. You'll have the Entrepreneur Journeys book series, of which we have 12 volumes. You can find all of them, and basically all of these are available for you to learn specific topics. And that could be bootstrapping using services. So for example, today, this came up in the discussion, bootstrapping using services. Manisha's business is one that potentially the right path, the right strategy for that business is bootstrapping using services. You could be bootstrapping with a paycheck. We see a lot of businesses that are, the best way to mitigate the cash flow needs is bootstrapping with a paycheck. So we're supportive of that. And so forth. Carnival in the Cloud is a book that specifically focuses on cloud businesses. So we have a huge coverage of cloud, and that is something that if you're looking at cloud businesses as your primary area of interest, you could use that material to learn as well. So go to the website. There's a ton of videos and ton of information. These roundtables happen every week. So this is the 329th roundtable, and we have still many more this fall. you just need to go to the free public roundtables page and register to pitch and or attend. If you want a more full-blown acceleration support, join the premium program, where we offer you extensive methodology guidance, a full curriculum that is a video lectures and case study-based curriculum. We help you with business development. We give you extensive strategy consulting. We have private roundtables like this, where we actually work on your businesses. You know, you get the curriculum for methodology, and then you get project consulting in the private roundtables. And we also help you with financing. We help you with media relations. All that is part of the premium program that is a $1,000 annual membership fee. You can go to the website. On the homepage, you'll find the $1 Million Club, where you'll find case studies of successful ventures. Quantifying the 1M1M value equation is an ROI analysis of the program. You can look at that. The 1M1M self-assessment is a set of questions that investors would ask you. And we believe that you are the first and the most important investor in this business, in the business that you are in. So therefore, you absolutely have to ask these questions of yourself so that you're not going down a path that is a kind of dead end. We don't want you to spend years of your life in a dead end mode. Now, if you just want to start with plugging your methodology gaps, you can start with 1M1M Basic, which is a curriculum-only option that is a monthly $99 a month fee, and you can start there as well. If you spend an intense, month studying the curriculum, you will make a lot of progress. We know that from experience. You just need to be, self-disciplined and a self-starter. You're going to have to monitor your own course through the program. And this does not include the private roundtables and the project consulting, but you will be able to access methodology through the 1M1M Basic. So anyway, go to the website. There's lots of information about all parts of the program. There are lots of video FAQs, etc. Our curriculum is a case study-based curriculum. There are over 750 successful entrepreneurs who have participated in building this curriculum by contributing their journeys, their lessons from the trenches, and we have synthesized all this so that you can learn from people who have done it before. And it's very well organized, very efficient, and you can basically travel in the footsteps of these entrepreneurs and learn from their journeys. And then there are video lectures that synthesize the methodology. As I said, our methodology is lean, capital-efficient, bootstrap startups. If you are looking for ways to amplify your message, what you're doing, get the word out there, we do have a lot of ability to propagate your message, amplify your message through our channels. We have a community of over 300,000 people that we touch through all our various media channels, whether it's blog, social media, etc. And we give you access to all of that amplification, mouthpieces to get the word out there about your business, and that's very valuable. That's pretty much it. You can look at the website and figure out if this program is for you. The next few roundtables there's one more in November, and then there are 3 more in December after Thanksgiving and before Christmas. So 4 more roundtables this fall. Feel free to book your slot, and we'll make sure that you have an opportunity to come discuss your business here. That's pretty much it, I think. We can do questions, and I have seen some questions sent as private messages to me. I will answer those questions in a moment. You can also call in and ask more questions. And while you're thinking about your questions, let me also introduce you to Irina Patterson. Her email is irina@1m1m.com. If you have questions about the 1M1M program, you can contact Irina, and she will help you with whatever it is that you are looking for help with. Okay, Q&A time. Let me go to Andy Williams, sends me a private message saying, thanks for putting on this event. What a wonderful idea for doing so much with so few resources. You're very welcome, Andy. Feel free to continue using the program to plug your knowledge gaps. Tekle Haimanot Yamane. Your message, by the way, these are private messages to me, so I'm just going to read out aloud. You're saying, I am from Eritrea, East Africa. For about 2 years, I've been writing on Eritrea national newspapers with columns that motivate and inspire readers to unlock their potential while at the same time developing my capability. To make my activity interactive, I occasionally conduct events with competition for kids and youth in art, literature, and technology-related talents. Now I have started to take my initiative globally and developing my own website. My intention is to bring those talented people I have been working with to this platform so as to mutually build a community of talented kids and youths. I have dozens of inspiring articles of my own that I intend to publish in this website platform. My question is how to make a clear business model around this concept. I have 2 ideas, and then you have not completed what those 2 ideas are. So if you would like, let me see, are you still in the room? Yep, you're still in the room. So feel free to complete your train of thought, but do it in public chat. Tell us what your 2 ideas are, and I'll be happy to give you feedback on them. Nicolas Almanza is asking, how do you place a value on a company which has not yet generated any revenue? Is it based on market and valuation, future forecast estimates? If a business/product is pitched to an investor at 100K for 10% and they believe the value of the business product is worth far less, what would be a counter without having any revenue results? Nicholas, in the early stage financing game, there is very little revenue to show. So the entire business valuation exercise is done on the basis of potential. And potential is gauged on a variety of different things. It's gauged on, partly validation, what are customers saying, or what are customers paying? Like you heard Janet's story. She went to investors with 2 paying customers. So what does that say? When you have 2 paying customers and you have some assessment of what is the business model, what is the pricing model, and based on that, we can teach you how to extrapolate what a total available market is. A bottom-up total available market size is one of the key metrics based on which valuation will be gauged. And also, it will be gauged on the team, the potential of how the team is going to execute and scale, and what kind of customer traction are you already getting. So it is not so much based on revenue, it's more based on experienced investors gauging potential. By the way, 100K for 10% of a company is a lousy deal. Our guidance is that you should try to get at least a $2 million pre-money valuation for any business before you raise any equity financing. Before that, if you raise money, try to raise it on convertible notes. That's just a thumb rule we use in our business. Anybody else? Thanks, Janet. Thank you for coming. And thank you for also staying to weigh in on the businesses. Anybody else? Questions, comments, anybody wanting to call in?
Are we still on mute?
You can ask more questions if you like. Is it Andy?
Yes.
Please go ahead.
My question is there a link where we can download this presentation?
There will be a link to the YouTube channel, so you will be able to find a recording of this session on YouTube as well as on the blog. So keep an eye out, and you will get notifications.
Excellent, thanks.
And by the way, your question is very good, because the reason we provide you with all this, recording, etc., is that a lot of stuff gets discussed, right? A lot of complex stuff gets discussed, and in real time, it's not always easy to absorb all that stuff. So having a chance to listen to it, replay the conversation over and over again, helps you grasp what exactly was getting discussed and what are the finer nuances of that discussion.
Right.
Any other questions, comments? Yes, Kevin, I'm pretty sure you will be able to come up with a better idea. And for
Actually,
those of you,
I did have,
just one
I did have
moment.
one question.
One moment.
Okay.
I have a message for those of you from Oracle who have applied for scholarships. Please go ahead and notify Susan Hoffman that you were at this session today and you have participated in the session, so that that gets factored into your application, because we do want to see that you have, you know, participated in roundtables and made the effort to understand how this program operates and how you're going to be leveraging the benefits of the program. Go ahead, Andy, you have another question. Please go ahead.
My question is, what is the key thing, the key value proposition of this social impact marketplace concept is creating synergies between marketplace participants. Therefore, there will always be a lot of moving parts in this concept. The idea is that when you have a business that that has to go it alone, you don't get those synergies that help that business succeed and that help that business get funding. So my question is, given that cooperative synergies are a core part of this concept and that therefore there will be a lot of moving parts, how would one go about describing this concept in a way that best connects with the audience?
So Andy, the best way marketplaces succeed is if you can get very granular and very specific about what is getting exchanged. Part of the problem with your business plan is too much is trying to be accomplished in a single marketplace. So if you look at successful marketplaces, one of them is Upwork, right? That's a skills-based marketplace. So people have different skills, and you have whole lists of skills, searchable lists of skills, and people are offering those skills, and those are, you know, largely digital skills. So you take those digital skills, you look at people who are looking for those digital skills, whether it's social media marketing or Java programming or Ruby on Rails programming or whatever, and they get matched and paired and so forth. So that is a very reasonable and very crisp, very finely defined marketplace. There are other marketplace concepts. Kickstarter is a marketplace where, you know, there's very specific, it's crowdfunding marketplace. So you could do a crowdfunding marketplace for the kinds of business that you're looking for and be very specific on getting just that value proposition working. So part of the problem with your marketplace concept is too many things want to get exchanged here, and such broad-based concepts don't tend to work in marketplaces. So you decide what is that one really granular, really precise thing that is going to be of tremendous value to your audience, and then you build your marketplace around that one value, and you will have orders of magnitude increased your probability of success.
Great, thanks again.
You're very welcome. Anybody else? Folks, we just have one more minute, and this is also a good opportunity to introduce yourselves. If you'd like to introduce yourselves and tell us where you're joining from, what you're working on, that would be great. Takle Hemenat Yamene, I read out your question, but you didn't complete your two ideas, so I'm not sure what you're thinking about in terms of monetization. But content monetization is not so easy At the same time, you can look at Google AdSense as one of the ways to monetize a content-based website, and that is kind of the most obvious way that people monetize content-based websites. The monetization volume or scale is not huge unless you generate a huge audience, but it is one that starts to monetize fairly quickly. In small denominations, but it does start to monetize quickly. All right, folks, it's 9:30 a.m. Pacific time. We've completed 90 minutes of discussions. So we will resume next week. Please come back, and we will continue the conversation, and I look forward to working with more of you in the next session. Thank you very much for coming.
Thank you so much.
Bye, everybody.